Welcome to my channel. I'm Scott, and in this video I'm going to walk you through the process of valuing Amazon stock by analyzing their financial statements and dissecting their financial ratios so we can determine if it's a buy or a sell. Let's get started with the model. This is a really large cap company, 1.9 trillion market cap. They're trading at 181 a share and they have 10.4 billion shares outstanding. Amazon is an e-commerce, cloud computing, online advertising, digital streaming, and artificial intelligence company. It is considered one of the big 5 American technology companies. The other 4 are Alphabet, Apple, Meta, and Microsoft. It was founded by Jeff Bezos and started as an online marketplace for books. But over the years, they expanded their offerings to include a wide range of products. Some people refer to this company as the everything store. Let's look at their financials. The way you value a company is you estimate the free cash flows into the future and then you discount those numbers back to today's value. That's what we're doing in this video. And free cash flow is cash flow from operations minus capital expenditures. They had a ton of free cash flow in 2020, 26 billion. They invested a lot back into their business, so they had negative free cash flow in 21 and 22. Then back to their biggest positive ever, 32 billion in 2023. And their free cash flow per share is $3.10. The way you calculate that, you take their free cash flow divided by their shares outstanding. Each share is 181, so your stake in the free cash flow is $3.10. They converted 6% of their revenue into free cash flow. Net income is a profit or loss on the income statement. It's revenue minus expenses. And that's really high, except in 2022 they had a negative 2.7 billion, but back to a really big positive in 2023. They had their highest net profit margin in 2021, 7%, which means they converted 7% of their revenue into net profit. Revenue is the sales for the company, and that grows a lot from 386 billion to 574 billion. Their revenue per share is $55. So if you own one share at 181, your stake in the revenue is $55. We estimated 4 years of future free cash flows. We also estimated a terminal value, which is all cash flows past year 4, that's 2.1 trillion. We discounted those numbers back to today using the weighted average cost of capital. We get a value of the company of $1.8 trillion. We divide that by 10 billion shares. And we get a calculated stock price of 172. They're trading at 181, so they're trading at a 5% premium. It is a sell according to the model. But I'm bullish. I bought $100,000 of the stock in May 2020 at 112, and I'm still going to hold. I think with AI and cloud computing, this stock should double in 2 to 3 years. There are 46 companies in the same industry as Amazon. If they have a number in red, they're worse than the median. If they have a number in blue, they're better. They spend $48 billion in CapEx. That's more than the market caps for almost all these companies, except for Baba, PDD, and Mercado Libre. But everybody else is below 48 billion. A good debt to equity ratio, for every dollar of equity they have 70 cents of debt. They don't pay a dividend. They generate a ton of free cash flow, 32 billion. They do generate more than Baba, but Baba has a much better price to free cash flow ratio. So relative to their market cap, Baba generates a lot more free cash flow. JD.com generates the most as a percent of their revenue because they have the lowest price to free cash flow ratio. They're trading at 6 times free cash flow. Of course, Amazon is the largest company on this list. They're one of the largest companies in the world. Only 3 companies are bigger: Nvidia, Microsoft, and Apple. I just checked, Google is bigger as well, slightly bigger. Right now, Google is a little over 1.9 trillion market cap. Meta is 1.3 trillion. And this company is trading at 9 times book value, 62 times earnings, which is better than the average, 58 times free cash flow, and 3 times revenue. This 3.3 should be red because it's worse than the average and median. They do generate a ton of revenue, more than almost any other company in the world, 575 billion. Walmart generates more revenue than any other company in the world. Walmart's also the largest employer in the world, largest public company. There are some private companies that have more employees. Like I think the US government employs more people. but the US government is a private company, not public. And Amazon is still growing. Their 5-year annual revenue growth rate is 20%. PDD is number one at 79%. Amazon has done 4 stock splits. The first one in 98, a 2-for-1, a 3-for-1 in 99, a 2-for-1 in 99, and then a really big one, a 20-for-1 in 2022. That is not common, a company doing a 20-for-1 stock split. You might see a 3-for-1 or 5-for-1, but a 20-for-1 is rare. Soon Chipotle is doing the biggest stock split ever, a 50-for-1. And if you put $10,000 into this company 10 years ago, you'd be really happy at $108,000 today. That's a 27% annual return, a 1,000% total return. Let's look at their financials. We'll start with their income statement, then their balance sheet, then their statement of cash flows. Here's their income statement. This is for all of 2021, 2022, and 2023. You can see revenue goes up each year. It's $575 billion in 2023. $256 billion is from product sales. $319 billion is from service sales. Let's get a breakdown of these numbers. Of the $575 billion of revenue, $232 billion is online stores, which is up only a little bit from prior years. This is their main business, selling products online. They also have physical stores, $20 billion. If you buy something online and go to a store to pick it up, it's mentioned right here, those sales are in their online stores, not their physical stores. Physical store sales are where customers go to a physical store and pick out the item and buy it. A big growth in third-party seller services, $140 billion. That was $100 billion in 2021. This includes commissions and any related fulfillment and shipping fees. Advertising, $47 billion. That's up a lot from $31 billion. This includes advertising services to sellers, vendors, publishers, authors, and many other parties through programs such as sponsored ads, display, and video advertising. Subscription services, $40 billion, up from $32 billion. This is mainly their Amazon Prime memberships. Also digital video, audiobook, digital music, ebook, and other non-AWS subscription services. AWS is Amazon Web Services. That's their cloud computing platform. AWS, where most people think the growth will be, that's up 50% from $60 billion to $90 billion. That's their cloud computing platform. Other, that's $5 billion. This includes licensing and distribution of their video content, healthcare services, and shipping services. Also, co-branded credit card agreements. Here's a breakdown of their revenue by country. US, $400 billion. Germany, $38 billion. UK, $34 billion. Japan, $26 billion. Rest of the world, $82 billion. I didn't realize Germany was such a big part of their revenue. Below revenue are the expenses. Cost of revenue, $304 billion. Fulfillment, $91 billion. Technology, $86 billion. Marketing, $44 billion. General and administrative, $11 billion. So expenses, $538 billion. Operating income, $37 billion. Their operating income in North America is $15 billion. They have an operating loss in other countries, a loss of $2.7 billion. They have really nice income in AWS, $25 billion, with only $91 billion of revenue. Really good margins. That's why people think AWS is the future, because they control about 38% of the cloud computing market, and it's such a profitable business. E-commerce is not that profitable. The margins aren't that great. They receive $3 billion of interest on their investments. They paid $3.2 billion of interest on their debt. They paid $7 billion of taxes, so their net income is $30 billion, EPS of $2.95. They are increasing their shares outstanding. It was 10.1 billion 2 years ago. Now it's 10.3 billion. Let's look at the balance sheet. Current assets, $172 billion. Current liabilities, $165 billion. So current ratio above 1. They have $87 billion of cash and marketable securities, $33 billion of inventory, and $52 billion of accounts receivables. This is how much money others owe them when they sell on credit. A ton of property and equipment, $204 billion. Here's a breakdown of that property and equipment. $105 billion of land and buildings, $185 billion of equipment, $28 billion of construction progress. The gross value is $324 billion. They depreciated $120 billion. So the net value, the value in the balance sheet, is $204 billion. Of the $204 billion of PP&E, $93 billion is in North America, $24 billion international, $73 billion in AWS, and $13 billion corporate. So total assets $528 billion, up from $463 billion. Their biggest liability is accounts payable. This is how much money they owe others when they buy on credit. They have $77 billion of long-term lease liabilities. This is how much money they owe other companies when they lease an asset, like for example, a building to operate in. Assets minus liabilities equals equity, $202 billion of equity. They raised $99 billion from selling their business, and they profited $113 billion from running their business. Retained earnings is the sum of all their prior net incomes. Let's take a look at the statement of cash flows. Their operating cash flow is $85 billion. The way you calculate operating cash flow, you start with your net income. That's $30 billion. Then you add back depreciation, $49 billion. Stock-based compensation, $24 billion. And then you have to adjust for changes in working capital. It looks like they sold a lot on credit, so that's a cash outflow of $8.3 billion. When those customers pay for their items, it'll be a cash inflow. In their investing section, they spent $52 billion of PP&E, lower than last 2 years. They spent $6 billion of acquisitions. Here's their acquisition activity. During 2021, they spent $500 million in acquisitions. In 2022, they acquired MGM Holdings for $6.1 billion. This was to add to their digital media content. Also in 2022, they spent $141 million more in acquisitions. In 2023, they acquired One Life Healthcare, also known as One Medical, for $3.5 billion. In August 2022, they acquired iRobot for $1.7 billion. Although in January 2024, they terminated that transaction, so they never went through with it. In their financing section, they added $18 billion of debt. They paid down $26 billion of debt. They paid another $3.7 billion of debt. They paid $4.4 billion on finance leases, and they paid $270 million on financing obligations. So in their financing section, they had a cash outflow of $16 billion. In 2023, they had a cash inflow of $19.6 billion. The way you get $19.6 billion, it's a sum of operating cash flow, investing cash flow, and financing cash flow. Let's look at the company on Simply Wall Street. It's $181 a share, 1.9 trillion market cap, up 1% in the past week, up a solid 77% in the past year. Amazon is a retailer of consumer products, advertising, and subscription services through online and physical stores in North America and around the world. They operate through 3 segments: North America, International, and Amazon Web Services. It also manufactures and sells electronic devices, including Kindle, Fire tablets, Fire TVs, Echo Ring Blink, and Eero. They also develop and produce media content. They offer programs that enable sellers to sell their products in its stores, and programs that allow authors, independent publishers, musicians, filmmakers, Twitch streamers, skill and app developers, and others to publish and sell content. It provides compute, storage, database, analytics, machine learning, and other services, as well as advertising through programs such as sponsored ads, display, and video advertising. They offer the really popular membership program, Amazon Prime. They serve consumers, sellers, developers, enterprises, content creators, advertisers, and employees. They were incorporated 30 years ago in 1994, headquartered in Seattle, Washington. They IPO'd in the late 90s, and the stock went up a lot right away. It went down about 90% in 2001 during the dot-com bust. This is one of the few dot-coms to make it out alive, and it's been smooth sailing ever since. All these numbers are stock split adjusted, so the dollar amounts were higher back then. But according to the chart, they were trading at $11 in 2011. Then they 8x'd to $90 in 2018. Their peak was mid-2021 at 187. I got it for 112 in May 2020. And a year later, I was up a lot. And then fast forward 2 years, I was down a lot. But I'm still holding. I'm back to 2021 levels, and I'm pretty confident it's going to go a lot higher from here. Simply Wall Street's valuation is $238. They say it's 24% undervalued. 56 analysts priced this stock at $207. They also say it's undervalued. Here's their revenue forecast for 2024, $640 billion, 2025, $715 billion, 2026, $794 billion. Their free cash flow forecast for 2024 is $62 billion, 2025, $78 billion, 2026, $92 billion. That's a lot of free cash flow. Look how much their revenue has grown over the years. It was $66 billion in 2013. 2 years later, it broke through $100 billion. That was in 2015. Fast forward 3 years, it's over $200 billion in 2018. Fast forward 2 years, over $300 billion in 2020. 1 year later, over $400 billion. That's in 2021. Another year later, $500 billion in 2022. And it's getting close to $600 billion. It'll definitely hit $600 billion this year. They didn't have much debt in 2013, $3.7 billion. It peaked at $92 billion in 2023. It's come down to $73 billion. But equity has been going up like a rocket ship. Equity of $201 billion. And they do have more cash than debt, so they could pay off all their debt if they wanted to. The CEO's salary is $175,000. He raised it to $317,000 in 2022. Total compensation $1.3 million. Tenure as CEO 3 years. Only one insider buy in the past year. No sells. 62% of the company is held by institutions, 27% by the general public, and 11% by insiders. Jeff Bezos is the biggest shareholder at 9%. His value of the company is $169 billion. Then Vanguard, BlackRock, State Street, Fidelity. The richest woman in the world, his ex-wife, Mackenzie Scott. She owns 2% of the company. Lots of big names, JP Morgan, Wellington, UBS, BNY Mellon, Eaton Vance, Goldman, Bailey Gifford. They employ a small army. It was 117,000 in 2013. Now it's 1.5 million. It was 1.6 million a couple of years ago. And the ticker trades in lots of places. The Nasdaq, Lima Bolsa, Mexican Bolsa, Deutsche Börse, Colombia Bolsa, BATS Europe, Santiago, Zicha, Swiss, Borsa Italiana, Wiener Börse, Santiago, Bulgaria, Kazakhstan, Sao Paulo Bolsa, Buenos Aires, and the NEO. So let me know what you think. Give the video a like, subscribe, or comment below. If you'd like to get a custom valuation or just support the channel, you can become a member by clicking on the link in the description below. Thanks for watching.